What's up everyone, welcome to Stockton. It's a pleasure to meet all of you. On this channel, we talk about stocks before they start blowing up, say goodbye to chasing stocks at all-time highs, and say hello to making some money. So if this sounds like something you want to take advantage of, then hit that beautiful subscribe button and like the video. Now let's get to it. Before we get into the video, I have to say that I'm not a financial advisor. Anything I say is just my opinion and is for entertainment purposes only. Having said that, if I'm talking about a company, I'll let you know whether I'm personally going to invest in it or not towards the end of the video. But you should always do your own due diligence, so with that out of the way, let's get started.
Palantir's stock price keeps on falling down, but the real question is, has anything changed fundamentally about the company? The short answer is no, but there are a couple of things that are causing this downward pressure on this stock price. Today, most growth stocks, including Palantir, have had it bad due to the rise in the 10-year treasury yield. Damn, this treasury yield business just doesn't go away. Just when you think we've moved on from this, it comes back with a vengeance. But there's another reason why Palantir stock has been trading lower, especially last week. Basically, last week, a Wall Street analyst issued a research note on Palantir, citing challenges ahead in its commercial business, and he concluded that the company's growth rate isn't high enough to justify its high valuation multiple. Now, in his report, this analyst talks about how Palantir has tremendous value for its clients, but its growth on the commercial side has remained below expectations. This analyst is also concerned about the slow commercial customer adds and makes the case that Palantir's commercial revenues are largely supported by its existing or previous clients rather than driven by new customers. But I think this is really misleading and is creating a lot of fear, uncertainty and doubt amongst retail investors. If you are a long-term investor like me in Palantir stock, then you only need to look at the remaining deal value. Palantir's remaining deal value by financial year 20 end rose by over 27% year over year. The company disclosed in its recent 10-K filing that the figure stood at $2.8 billion, which amounts to roughly 2.5 times its financial year 20 revenue. What's even more interesting is that Palantir's commercial segment remaining deal value rose by approximately 45% year over year, and this was responsible for driving the company's overall remaining deal value higher, and now accounts for the majority of its total remaining deal value. Now, I don't know what that analyst was smoking before he wrote that report, but this doesn't sound like weakness in the commercial space to me. The solid growth in Palantir's remaining deal value highlights the continued traction amongst its clients. It's clear to me that Palantir is only getting started and it is far away from losing its momentum in the commercial space. It's also important to note that Palantir is changing its payment policy. It used to charge customers upfront for multi-year agreements where it would collect payments, record it as deferred revenue, and recognize revenue with each passing quarter. However, they are now transitioning to a customer-friendly recurring fee model where customers would be required to pay at predetermined intervals to boost platform's initial affordability and to increase the company's traction in the commercial space. Now, this means that Palantir's deferred revenue is likely to remain muted going forward, and the company's future growth would be best indicated by its remaining deal value. So I'm not too concerned about Palantir's slowdown. On the contrary, I expect Palantir's commercial segment to start growing rapidly during financial year 21, in light of its new payment model and its rapid growth of remaining deal value. Leave a comment below and let me know what you think about this analyst's report and whether you agree or disagree with it. That's it for today's video. Have an awesome day and I'll see you in the next one.